Yeah, good evening.
Good evening, sir.
Good evening. Can we start now?
Yes, sir. You can.
Is it visible to all of you?
Yes, sir.
Okay, thank you. So today, would like to discuss another chapter that is also related and relevance to export and import, and how it is going to be maintain a proper balance between these two, that we would like to discuss. Like in financial accounting, we have studied the double entry system. That is, we follow there in the balance sheet preparation. Like that, we also would like to discuss or highlights the concept of balance of payment relevance to the export and import. Okay. Fine. So what I'll do now, I will just show you or would like to discuss the both the double entry system, how it is maintained, and subsequently we'll discuss the theoretical aspect of the balance of payment, and few examples also would like to discuss. So balance of payment is an accounting statement. Like in every accounting system, there will be two aspects. One is the debit side, will be corresponding credit side. Or it is also like we used to maintain like a trial balance, that both the side has to be properly maintained and should be equal. All debit will have a corresponding credit. So it is an accounting statement in which all economic transactions are recorded. All economic transactions are recorded. What are these economic transactions? Between a resident of the country and the rest of the world, abroad. And the transaction is what we call export and import. Like in financial accounting, we used to follow or we say in financial statement analysis, we used to prepare the P&L account, balance sheet, cash flow statement, and all. Like that, also we would like to maintain the transaction. So when we talk about economic transaction, this economic transaction is related to the export and import. So it will be done, whatever economic transactions are made between the resident of the country and the rest of the world are going to be maintained in the format or a system, what we call accounting statement, or that is what we call BOP. So what are those things we would like to maintain? When we talk about economic transaction, what are those things we are going to discuss? So we can categorize this economic transaction or in the four things, right? Which comes like first part, it will be visible, like we consider the goods, what we touch, we feel, and we can measure also. So that is what we call visible items. All visible items we are going to be record. Then invisible items, only we will feel, that is services, tourism, banking, IT services, transportation services, insurance services. This is what we call invisible items. So this economic transaction can be categorized into four. One is visible, which is related to goods. Another is invisible, which is related to services. Third is the one-sided, or what we call unilateral transfer. One-sided items like gift and donation, etc. Why we call it one-sided? If you take the example of our Prime Minister, when he goes to outside, he gets the some gifts he used to get from different countries, and that is not going to be transact. We are not going to give a transaction rate. That means we are not returning it, that you had given me a gift, so on that I will be return some return gift. Those things are not there. There is no concept of return gift, so it is considered as one-sided or unilateral transfer, and that we also consider the third item in the economic transaction. Fourth is the capital transfer. Okay, so that we'll discuss in details. In capital transfers or in capital transaction, mostly we'll be dealing with the lending and borrowings. Okay, and there is one more item also we consider, that is financial accounting, that I'll show one next slide. When I'll go discuss it, I'll show you. So friends, economic transactions are considered in four aspects: visible items, invisible items, unilateral transfer, and capital transfer. So it follows a double entry system. Why double entry system? Because both import and export, both the side are maintained with the debit, like our debit or receipt or payment, or debit or credit. Let's look at this. This is the concept of the balance of payment that we'll discuss later on. First, let me go to this. Okay, so friends, I would like to show you both the side of the double entry system. One side is the debit item. One side is the debit item. It is this is what I am showing, the double entry system. One side, left side, is our debit item, or we call minus, negative. All outflows or money goes, that items we are going to record here. Other side is the credit items. We call it is positive. That speaks about all inflows. Here this is all outflows. Here this is all inflows received from outside, right? So this is what left side is our debit side. Our payments are all outflows, and the credit side is all our inflows, or we received from abroad or outsides. Okay. Next, this is what we would like to discuss. Our import of goods, we call visible items. I told that all visible items are we can touch, we can feel, we can measure, and all import of goods. Import of goods means money will go out. So we are importing means we are spending, we are paying for that. So that comes debit side or negative side, or outflow of money. So the first transaction we consider, this is import of goods, that is visible. So when there is a debit side, there will be corresponding credit side also would be there, and credit side says export of goods, or this is also considered as the visible items. So this transaction, export and import. Export, we consider money will go out, and import will say money will go out, and export of goods will receive the money. Okay, this considered as a visible or goods item. Okay, this is one showing the structure. We'll go in details about that. So when we are saying visible items of goods, that speaks when there is a difference between export and import. Conceptually, we get one important aspect, that is what we call balance of trade. Difference between export and import is considered as a term what we call balance of trade or BOT. This is the first phase of our double entry system of preparation of balance of payment. Debit side negative, credit side positive, all outflows, all inflows. And first item, as we said, visible, invisible, unilateral, and capital. So we are considering visible, that speaks about import of goods, and export of goods, which tell us about how money comes to us, how money goes from our will go out. So, and the difference we consider, it is called balance of trade. This is one item. Second transaction, we will go for import of services. That is what we call invisible. Invisible. That means only it's not visible. Only we feel, like our banking transaction, the doctor services, banking services. Doctors also give services. Transportations, insurance, all services are considered as invisible, right? Then one side, if it is import of services, your BPO is also there. That is one more item of import of services. There is banking services, there is shipping services, there is insurance services. Likewise also, there will be corresponding credit items of invisible, that is export of services. And that means we receive money by giving services of banking, shipping, BPO, all those transportations. When we receive, we consider as the, in this form, we consider the export of services, that is called invisible. So we discuss visible. One difference is balance of trade. Second point we discuss invisible. There is import of services. Another is the export of services of invisible. Third item is the unilateral transfer from the abroad. Unilateral transfer to abroad, right? Unilateral transfer to abroad. When to abroad, then opposite side would be transfer from abroad. Okay. So I hope I was going through an article about. I hope you must be knowing that there is an issue with the Imran Khan for selling of this, gift item, what did I receive from the different countries. They are not allowed, being the Prime Minister. That is the property of the country. Wherever you go outside, abroad, and you get some gift items, whatever gift items, that is not your individual property. That is a property of the country. You are not allowed to transact. So it is unilateral transfer to abroad. Sometimes we give, any leader comes to India, we also give some gifts. That is what we consider unilateral transfer to the abroad. And when our leader goes outside, they receive. That is what we consider unilateral transfer from abroad. This is third point: visible, invisible, and unilateral transfer. There are small items we don't consider in that bigger way in the part, but again, transactions are there, like income paid to abroad or income received from the abroad. So small incomes also we are not going to overcome this. We are going to consider so far as accounting transactions are there. So the incomes like rent, interest, those things also we used to consider. So far as the transaction is considered, we are also considering these small transactions. Of course, these are small in nature, but we will be considering as a transaction. Then comes to the capital accounts. Capital accounts. Capital accounts means what? Capital accounts is based on lending and borrowing. Sorry, there is a small typing. Acha, theek hai. Okay, okay. So first point comes the lending to abroad. Okay, lending to abroad. That means whenever we are suppose we are giving loans or investment has done somewhere, so that is what we consider that is lending to abroad. Another is the borrowing from abroad. Borrowing from abroad. That means any borrowing in the form nature of capital will be considered as a credit item. Lending we consider as the debit item. Second point, although I kept it in the capital account, but it should come under the financial account. It varies from different, concepts. You can take it in the form of capital or you can put it in the financial account. Why financial account? Because these investments to abroad and investment from abroad, generally these are money given and money received concept so far as the transaction is concerned. So we also can consider as a financial accounts. So is it okay to all of you? Debit item, credit item. Debit items are negative, are outflows of money. Then credit item, all inflows are receipts. It is categorized into four parts: visible, invisible, and unilateral. So both the side treatment has to be done. All debit will have a correspondence credit, and that is why we used to maintain this transaction. Is it okay to all of you?
Sir,
Okay,
yes, sir.
okay.
Yes, sir.
Suppose if I look at like this, of course, I don't have that device with me, otherwise would have considered. Suppose my my import of goods or visible items, suppose if it is 4,000, right, and export is 5,000. There is one message is coming. Prakash is requesting to record to their computer. What is this? It's coming. Anyway. So if I consider, you can write, sir, if you are writing, export of goods, suppose if it is 5,000, and import of goods, suppose 4,000. Right? 4,000 is import and 5,000 is the export. That means there is a difference of 1,000. There is a difference of 1,000, and this difference is a positive difference. 5,000 minus 4,000 is 1,000 is a positive balance. What we call, the technical we call surplus of BOT. That is what we call surplus of BOT. Right? If it is export is 5,000, import also 5,000. That means we call balanced BOT. So one is surplus BOT, second is balanced BOT, and third, if the import is 6,000 and export is 5,000, here there is a negative balance that speaks about deficit BOT or deficit balance of trade. So from this we can say three approach. One is surplus, balance, and deficit. Accordingly, we used to maintain the balance of trade. That is in the form of visible items, and it is related to all goods only. It is related to all goods. And three statement is going to prepare. If it is surplus, it is balance, and it is deficit. So if I put the figures here 4,000 and this side 5,000, or reverse 5,000, 5,000, or 6,000, 5,000 also, we can consider this example. Second, in the import of services, suppose if you are giving 3,000, suppose the import of services for BPO, banking and shipping, suppose if I consider this is 300 rupees, and suppose invisible also 300 rupees, we can balance it. So if you see here, the entire process, visible, invisible and unilateral, this is considered as current account. You can see the right side I wrote here, current account, visible, invisible and unilateral. This is considered as the current account. Current account plus capital account plus financial account is considered as the balance of payment. Okay. Suppose, let me check whether it is there. No, to tell here only. Suppose your this debit item total comes, suppose it total comes 7,600. If you are writing, please mention here the debit item total comes. You can put this visible 4,000, import of services invisible 300 you can write, and unilateral also you can write 3,000, and income write 300. Please write this. I'm sorry, I forgot to write this. 4,000 suppose visible, 300 rupees invisible, 3,000 rupees unilateral, and 300 rupees small transactions, small incomes like this. This total comes 7,600. Also, please write credit items. This visible is 5,000. Export of services invisible is 300. And unilateral transaction, suppose it is 2,000. And income received from abroad, suppose this is 200. Friends, you are writing or any confusion, you can tell me, I'll repeat also. Am I audible?
Yes, sir.
You are writing, sir, or any issues, any difficulties here?
No difficulties.
Okay, okay. So if you total the debit item, it will come 7,600. If you total all the debit item, it will come 7,600. And if you total the credit item, it will come 7,500. So 7,500 is positive plus 7,500, and left side is minus 7,600. So the difference is here 100 minus 100. That means the balance of current account, or is in the deficit mode. That is what we call CAD, current account deficit. Current account deficit is the debit item is more than the credit item of this total, what we call the current account, then we get the deficit, or we call CAD, current account deficit. If it is reverse, suppose 7,600 plus and minus 7,500, that means we are getting 100 rupees. That speaks about CAS, current account surplus. And if it is same, then it is called CAB, current account balance. Okay. So when we have a deficit, what should we will do? When there is a deficit, that means both the side debit and
Sir, balance sheet 0 means it is called current account.
Sir? Yes. Suppose the right side is 7,500 and left side is 7,500. That means it is tallied. That is what we call CAB, current account balanced. Like last I said, 5,000 bala. One is surplus, another is balance, another is deficit. Right, sir?
Yes, sir.
Okay. So here in the first example we found plus 7,500 and minus 7,600. So there is a deficit of 100 rupees, how it will be maintained? As per the principle of double accounting system, double entry accounting system, both the side debit and credit has to be equal. But here there is a deficit. What should you do? Yes. Then we would like to knock the door of the capital account. We will knock the door of the capital account. So we have to borrow that 100 rupees to make the transaction a balanced one. So we have this, capital account where objective is lending and borrowing, and we can borrow 100 rupees to make the current account balanced, right? And the capital account is maintained in such a way so that it is generally maintained by the Reserve Bank of India, so that we would like to balance both the sides. When there is a deficit, we borrow. When there is a surplus, what should we do? Yes, then we can go for investment to abroad, because unnecessary keeping a money, idle money is not advisable. So what decision we take? If it is a surplus, we'd like to invest, right? We'd like to invest the surplus money. If there is a shortage or deficit, we'd like to borrow, so that both the side of the double entry system will be maintained. If there is no borrowing and lending, then what will happen? Suppose there is possibility there is no borrowing and no lending. Then what we'll do? We would like to knock the door of financial account, the second part of the capital account. Investment to abroad, investment abroad. So we would like to knock the door of the Reserve Bank of India. Reserve Bank of India is having a substantial good amount of foreign exchange they used to maintain. So from them also we can avail. If it is a deficit, we can avail from that. If it is surplus, we would like to give it to that also. So this is how, in the nutshell, I try to explain you that how these transactions are maintained in the balance of payment. The word balance speaks that every debit will have a corresponding credit. And if there is a deficit, we would like to avail the facility from the capital account, so that both the sides can be properly maintained. So three things we have already discussed, that the four items we used to maintain in the BAP: visible, invisible, unilateral, and some small incomes also we would like to consider. Then another is the capital account. So both the sides we used to maintain, so that our balance of payment we can maintain in a proper way. So only related to goods is considered as the BOT, balance of trade. And in the balance of trade, if the export is more than the import, we consider it is a surplus, balance surplus, or we call surplus BOT. If the export is more than the import, we call surplus BOT. If the export is same as import or is equal to import, then we call balanced BOT. And if the export is less than the import, we call deficit BOT. This is how we used to maintain the balance of payment. So with one slide, I hope you are getting all the detailed information. Is it clear to all of you? I try to give it as simple as possible. Anyway, so now I hope you understood this concept of balance of payment. Now what I'd like to do, I'll go back to this definition, what I'm trying to show you earlier. So the balance of payment, in short, we call BOP, records all economic transactions between a resident of a country and the rest of the world. Second, it is closely tied to international linkage because it reflects how goods, services, capital, and financial flows connect economies globally. Then I discuss this chart. I hope you must have clear from this. Now let's look at in this pictorial format, BOT, right, is less than the current account, because BOT is only deals with the goods, visible item. Current account is another bigger one. Current account deals with what? Visible, invisible, and unilateral, and small incomes also. So goods, services, and unilateral transfers. So BOT is smaller. Next bigger is the current account. Next bigger is the BOP, which consists of goods, services, unilateral, capital, and financial also we consider. Okay, here I was going through one article. I got this picture. I liked it. I thought to share with all of you.
Sir, BOT is the balance of trade.
Yes.
BOP
Balance
is
of trade.
BOP is the balance of
Trade. It is the difference between export and import. You can see it here. This first highlighted import of goods that is visible, export of goods that is also that is visible item. And if it is excess to that, we consider the difference we consider is the BOT, balance of trade.
what is the full form of BOP?
BOT, balance of
BOP,
trade.
BOP.
Balance of payment. Balance
Balance of payment. Okay.
balance
Thank
of
you.
So we consider when we do the trade, we only consider the goods item or visible items, and consist of all these things, visible, invisible, or goods, services, unilateral. It's considered the current account, and all together we put in the basket. That is what we call balance of payment. This is what I was telling that I got somewhere. I was going through this article. I saw this. And I liked it. Once it's shared to you, you can go. Here you can see the current account, capital plus financial account. Current account, he has mentioned goods. This is visible. Services, that is invisible. Incomes, oh, he has not mentioned unilateral. Okay. Also, we consider that as unilateral. So I thought I was going through this article. I thought to give it to you so that you can have a better understanding from this. This is a repetition of the last lecture. Okay, now what are the things we had discussed? I would like to explain in this theoretical aspect also. I hope you must have clear now what is the concept of BOP and how it is maintained. This BOP is an accounting statement that provides a systematic record of all the economic transactions between resident of a country and the rest of the world in a given period of time. When we call given period of time, what does it mean? It means one fiscal year. It means one year or a fiscal year. Fiscal year means starts from 1st April to 31st March. And there is a concept they follow that is called flow concept. If it is a yearly concept, we call it a flow concept. And 1 point stock concept also, that is another concept we call 1 point stock concept. If it is a yearly basis analysis, we call flow concept. Okay, so in a given period of time, it shows money flowing in and money flowing out, in and out of a country. It is a summary. Okay, it is a summary statement in which all the economic transactions between resident and rest of the world are recorded during a particular period of time that is mentioned in the fiscal year. It includes transactions relating to visible items, invisible items, unilateral transfers, and capital transfer. It is a flow concept as it related to a given period of time. So resident of a country includes individuals, firms, and government agencies. However, resident do not include diplomatic staff, foreign military person, tourist, and migrants. Now, as we understood the economics transaction, let's look at some of the revision of what we understood. Visible items. This includes all type of physical goods which are exported and imported. These are called visible items as they are made of some matters or materials and can be seen, touched, and measured. Visible items. Second is invisible items of trade, refers to all type of services like shipping, banking, insurance, all type of services which are given and received. These are called invisible items as they cannot be seen, touched, or measured. Third is unilateral transfer. It includes gifts, personal remittances, and sorry, this was typing error, and one-way transfer. Since these transactions do not involve any claims for the repayment, they are also known as unrecovered transfer. Then comes capital transfer. Capital transfer related to capital receipt, that is through borrowings or sale of assets, and capital payments through capital repayment or purchase of assets. Now, let's look at the structure of the BPO. As I said, the balance of payment accounts uses the double entry system for recording the transactions with the rest of the world. I hope you must have studied in financial accounting the concept of double entry accounting system. Just tell you what is that. The double entry accounting system, this generally records every transaction at least 2 accounts with an equal and opposite debit or credit entry to maintain the balance of the fundamental accounting equations. Fundamental accounting equation. When I said accounting equations, that means every asset will have corresponding liabilities. So that's what we understood from the balance sheet. Asset is equal to liabilities plus equity or capital, we say. Asset is equal to liability plus equity. This double entry accounting system method, it provides a complete and accurate financial record and making it possible to generate financial statement, and it's also prevent from the fraudulent active fraud. So this gives a complete accounting financial records. So when we look at the balance sheet, it gives us all the detailed information about the company. Based on that, all the investments are going to be made. I was going through the recent Lenskart IPO, its balance sheet and all. I think some of you must have gone through it. The debt balance, the share capital balance, the reserve and surplus, interest paid, all these are PE ratios, EPS, EBITDA. These are some items we used to check while understanding the financial feasibility report of a company. So the balance of payment accounts, it has 2 sides, as I said in that example, credit side and debit side. Credit side, all invoices or services of foreign exchange are recorded on credit side, and all outflows of uses of foreign exchange are recorded in the debit side. Then in the accounting system, balance of payment is always balanced like trial balance, as it is prepared as double entry system. I hope you must be knowing while you studied the financial accounting, we prepare journal account, then we prepare ledger, then we go to the trial balance. So there we used to try to find out that all the journals and ledgers must be properly recorded, so that immediately we'll get the picture whether all debit is having a corresponding credit or not. However, In economic sense, balance of payment need not be always equal. It means BOP can be balanced, can be surplus, can be deficit. When we call balanced, in BOP is balanced when receipt of foreign exchange are equal to the payment of foreign exchange. When we say surplus BOP, BOP is in surplus when receipt of foreign exchange are more than the payment of foreign exchange. And deficit of BOP when receipt of foreign exchange less than the payment of foreign exchange. You can see here, if BOP is greater than 0, we consider this is surplus. That means more inflows than the outflows. If BOP is less than 0, it is considered as a deficit and more outflows than the inflows. So I just repeat once again, the balance of trade BOT is equal to export of goods minus import of goods. It is also known as balance of visible trade or trade balance. There is a small formula we can find out. BOT is equal to value of exports and value of imports. Positive BOT or trade surplus when export is greater than import. Negative BOT or trade deficit when import is more than the export. Then why it matters? For government, it helps design trade and monetary policies. For investors, it indicates the stability of country's economy, and for citizens, influence currency value, inflation, and employment opportunities. Let's look at one example. Suppose a country has export 500 and import 600. It speaks about that import is more than the export, so there is a trade balance. Okay, what is that? Minus 100. Minus 100, that speaks about there is a deficit. Okay, trade balance. And if the net income, suppose 50 rupees, net transfer is also 20 rupees, then our current account would be minus 30. Okay, so here, if the capital account is 10 and finance account is 40, then we get, and if there is a changes in reserve is 20 minus 20, BOP is work like this. That means
Sir, how it is? CA will be minus 30.
The net transfer minus net income.
That's a net transfer minus net
Minus
income.
net income, yes. 20 minus 50. So here the BOP what we can calculate, this net income plus capital account plus finance account plus any changes in the reserve. Where from we get the financial transactions. And here you see the BOP is 0. That means both debit and credit side are maintained, correspondingly properly maintained. This shows the accounts balance out. This is again a repetition of my previous slides. This is all about today's session on balance of payment. Sir, all of you are writing now, because this needs a proper writing, because
We are expecting the slides.
yeah, sure. 100% I'll give it. I'll put the figure in this in a first slide what I was showing, the double entry system. I think that will be better if I put the figures.
Yes, no.
Yeah, I'll put the figures and then. Okay, anything else you would like to? I think today is the last class, or we'll have one more class, I think.
No, sir, today's online class is last, but there are 2 offline classes for each papers.
Acha.
It will be 13 to 18 December.
Acha. Okay. So today is the last class for us. Okay. Anyway, I missed one class, I think, in that way. I was absent in that. Anyway, when we'll meet, I think, as you are saying, 2 classes. What is the objective of these 2 classes? What will be the objective of these 2 classes? Discuss it.
To interact with the faculties, and if there is any doubt, then any
Acha.
guidance for the question exam, like this.
Exam guidance. Oh, acha, 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 acha. Okay. So mostly would like to discuss the expected questions with answers. What you expect from me,
Yes, sir.
or possible questions with the answer that we can discuss. And irrespective, apart from that, also if you want that I should, it's too much. It will be reviewed all, taking all classes also, it will be too much. Only thing we can do, wherever you have confusion, we can discuss. Or if you know some extra thing also, I would love to take and put it in my slides. It will be a better understanding for me also. Anyway, I think Rasmi Madam will inform us about the physical classes and the modalities also. Then we'll discuss once we meet. Badly, at least the first class should be physical. What I feel, we should have a first class should be physical. Rest of the classes should be online. Because without
that should be, but
yes, the structure and system is like that. Anyway, it is a wonderful interaction with all of you. Thank you very much for your patience hearing to me. I hope you must have enjoyed. And once I share you the PPTs, you go through the details, you add whatever important things can be there. I always recommend that you need to take a printout of this and add extra things. So if it is available from your book or any other or your study material or any other books also, if you are referring, you can add the thing. Because this is a subject, not a simple subject, not ordinary, because we are dealing with the international business and finance. So it needs a thorough understanding about the foreign exchange market, multinational entrepreneurship, international monetary and financial system. These are the things which is badly needed to be studied. But mone rohiboni actually, mon rohila bada jinsa nuhe. It will take time to understand. But statistics is badly needed. Kete kon FDIs hochi, kete FIs hochi. You need to collect those data so that you will get some idea how the country is running, how the international market is going on.
thank you,
Right,
sir.
sir?
We are grateful to you.
Thank you very much. Thank you very much.
Thank you, sir.
Shall good night to all of you.
Good night,
Thank
sir.
you
Good
very
night.
much. Thank you. My number is there. I hope you will not face any problem. Anyway, good night and thank you very much.
Thank you.
Yeah, thank you, sir.